Hey guys, this is Julie, and we just finished up a flat session. We had PT2 range 78.50. I think PT2 was 84.25. Didn't quite get up there. We stayed inside the daily one, but we did manage to, get that bearish fade that I was looking for today, mainly because this 6-month one is still holding the resistance. So this is the big number right here. We have the quarterly distribution closing tomorrow. Here were the quarterly ones just above it. So that means if you look at your bell curve, you know, they would have parked their resistance or their risk right up there, 58.10 perhaps, and they didn't want you anywhere near it, right? Because that's a quarterly contract. So they just sat on it and we could probably get up there and clean some of these stops out and then come back down, or I don't know what they're going to do. Honestly, we have indications that there's puts going to be in play going into end of month, but nothing happens in a straight line down. But as we get closer to the end of the month, we could, next week, end of next week, be looking at much lower price. So check the um, research I did today on the quarterly end of month, showing you those lower put strikes that could draw price down. And then once we get the end of the month close, which is an afternoon close, you can come back and expect a rally because you'll have all new um, loaded JHEQX levels, and that new Vega push will often ignite a rally on the first of the quarter. So we'll be looking for that, but it's not a guarantee. I mean, if we're in short negative gamma, be careful because they'll flip on a dime. They'll turn, once that line hits, it's your implied volatility line on the gamma, and it's a daily implied vol level. Quick Strike shows it so well. Let me show you what that looks like. Um, Hang on one second. I'll pull it up. So you can see what I'm talking about. So you see you have two volatility lines today, and that's the settlement vol and the current vol. So here was the line that would break lower, 55.90, 55.80. But we were way up here, 57.20, and got down to 57.60. So we've been trading between, that 57.60 down to, well, today, let me get back to the 56.90, 56.88. So we never made it back down there. And I was showing that there was some negative gamma that would kick in before we got to this break. And that comes in, look at this delta right here, that 35 delta. But so really below 56.80, we started picking up negative gamma in front of it. And you can check your pricing sheet. Make sure I'm on today's sheet. And you could see a little bit that 67, 63, 59, 56. I guess I didn't get too negative. Maybe I was looking, well, it was from this morning, so it could, the gamma could have changed a little bit. Well, it does get negative. I mean, I'm sitting here thinking, what the hell? It's dropping. Do you see that? Um, 269, 266, 262, 252. So that's going down. That's negative. So that's liquidity getting pulled out of the market for the market makers buying gamma, meaning that the market can run with it. Do you get that concept? So it can start moving faster because it's going lower. Um, when it's rising, they're selling into it um, because they make money selling into it, right? As implied volatility rises, they can sell into it, dampening the vol. When it's falling or negative, they're not selling into it and it can run. So there you go. Sorry about that. So the analysis was correct, and you can see the slope going down, negative. But the break would have been at 55.80, 55.90, and we never got anywhere near that. And 55.80, 55.90 was way down here. So that wasn't even in play today. We were way up here in the inside the daily one. But just, a stable market. But always check the slope of that gamma. See which side of the gamma you're on. Are you going long gamma? Or are you going short gamma? And that can help you understand how the market could run, especially if you get outside the 68% of the range, like on a weekly or a daily. So here's your weekly ones. Right here, we're right in the middle. But once you break those ones and break out, long or short, that's when it can get, moving pretty quick um, and bouncy. Um, and here we went to the threes. So we're way below the weekly ones up here and went to the threes and kept going. And we're just going down and down and down. But all below the weekly ones. And that shows that bearishness on the lower time frame on the daily. And when you can match that on a monthly or, like right here, it broke out of the monthly one. You see how it takes off to the downside? Up here it broke out, started it. But when it's inside, they're delta neutral. They don't care where it is trading inside of here. It's just going to float around up and down. But when it starts breaking out, they're participating. They know how to make money. There's no doubt about that. And right now we're just balanced flat, waiting to get to their quarterly contract, which looks like this. I showed you with the 6 month. So we were already outside the quarterly ones, and they did not want it to go back inside. So you can see it better this way. So we were below the quarterly ones, hit the first quarterly three, but with the other twos. And the difference is the difference between 90 days, 12 weeks, um, or the number of exact days in the trading session. So the exact number of days in the quarter, or that were trade days. And between all three of those, between the open and close, we get all these different lines. And so you can see this confluence really did act as that resistance level. Took a big bear bar to get through it, and then it really held. So even though it got very bullish this morning, Everybody was on TV saying, all the CNBC people, rally, rally, rally. We're going to be, rallying up from here. What a turn, blah, 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 blah. I'm like on Twitter saying, no, I'm not going to get past that 6 month one. So it's a big level. And, you know, for all intents and purposes, if they tell you to buy the dip, that's the dip. I mean, you're below the 6 month one. That's a dip, but that's a big dip. So, will it go up tomorrow? It could. The monthly ones were below the three, so it could get up here to like 58.74, 58.75 pretty easily. Or it could come down to 53.89. My analysis of looking at the quick strike option flow for the end of the month is more indicative of it. Those lower puts are the ones that are getting the volume. So just keep that in the back of your mind. Um, so we might see the bottom end of this before we see the top end, is what I'm trying to say. Could we hit these ones right here and then come down? Yes. It could easily come back and, whip these support resistances out and then come back down, because we're going to have new 30-day and 4-week ones pretty soon, and trade day months. But we have to get to the end of the month. And so I would really like to say, if I think this 5,800 is going to be resistance because of those lower puts at this time. I mean, they're just stacking lower puts. But you know what we need to see when that happens? We need to see the yellow, which is your 1 period inside your 14 period daily. We need to start seeing that rise back up to get to the downside. If we're inside the daily distribution like this, you're not going to get down here. You're going to drift up. So stay inside the distribution, drift higher. Outside the distribution, go down. It's not hard. Just keep your eye on the 1 period over the 14 period on the daily, and I have it right here. It's always up here. And if you open this up and look at it, you can see the slope that I was talking about. Once those bands start sloping up, that's when these daily, ranges start meeting the 3 and breaking it. Otherwise, if you're sloping down, see the slope down, the range got slow, flattened out. All this was flat range, and then it broke out again. So follow your VIX. If your VIX 1 period breaks the 3, that's when you get that range expansion. When the VIX is inside, sorry, when the VIX is inside the daily, that's when you get your contraction. And you see the slope of this really coming down on the VIX. So, all right. All right, so that's it. Waiting for tomorrow. Let me know if you have any questions, and I'll get the report out in the morning, and we can look forward to some volatility tomorrow. All right. Talk to you guys later. Thank you.